The discussion on markets forward with Aveek Mitra joining us from Aveksat Advisory in New Delhi. Aveek, good to have you. Aveek, before we
Good
talk about,
afternoon.
you're a value investor. You hate overpaying for an idea. We'll come to the style and what you're looking at right now. But before that, a quick view on the construct of the market right now. Because, obviously this is a very big event, and if it doesn't pan out the way market expects it to, then you'll get even juicier bargains. But if it does,
Absolutely.
what happens then? How are you analyzing the overall construct right now?
It will be a little longish answer, Ajay. So permit me if you have time. And first of all, good afternoon and thanks for calling me. So last year we have generated excellent returns till April, March 2024. So we are a bit cautious, and so we have not put in new money before for last I think 1 or 2 months, except bits and pieces here and there. Raised cash a little bit and just waiting for that date to pass, because that is an uncontrollable, unknowable event for an investor. So it is like hedging a portfolio. We have taken out some money and not invested fresh money into it, and nibbling into areas where uh, we are investing at present based on the sectors which has gone down over last 2 3 years. And we have also built up different scenarios, with most likeliest scenarios to the not likeliest scenario. And based on that, we will immediately try to see that what best we can do with the cash after the 4th June result.
Okay, fair point. What are the areas you are researching and reading right now, Avik? Anything new on your radar?
Yeah, I think presently I'm looking into the chemical sector, pharma sector. Actually, we are overweight on pharma at this point, significantly overweight on pharma at this point of time, primarily because it is a defensive sector. And second, we are looking into chemical. We are looking into some banks. We are looking into areas where we think the value may emerge if the situation pans out on the election as likely as the more likeliest scenario which everybody is predicting, like the continuity of the present dispensation.
So chemicals, interestingly, some other brokerages also are coming out with notes on selectively on chemicals, and we also saw commentary from say SRF for that matter. UPL is talking about a turnaround after a bad phase. What are your triggers of arriving on chemicals? It's a under-owned, completely ignored space, but why have you started work here?
Yeah, so we are actually following the results which are coming out and also talking to management in bits and pieces here and there, and also looking into the global situations. We think that the long-term structural story remaining intact. It is basically an inventory destocking which was actually taking much longer than it was anticipated earlier. And then there was a dumping from China. So all these things can gradually slow down, and also a lot of expansions which are coming on stream from different big players. So that also will have an impact on their top line. Maybe on the bottom line, the impact will take longer, because those kind of capacities which are coming to place will take longer to fully utilize and fully sweat it out. But that way, I think that there are no other areas where we can get things which are selling below 20 PE, and with a reasonably stronger balance sheet and much bigger in size. So that kind of areas which interests us at this point of time, and we have put in some money apart from pharma.
Right. But the main issues in chemical. One is pricing. Chinese were dumping at lower pricing, and our guys back home, on the one hand, have not halted their capacity expansions at all. They may have, on the receiving end, obviously compromising on profitability, margin, volume, all of that. So how is all of this adding up? Do you think that this is the worst of the period is getting over now and valuations are cheap enough?
Well, I think the valuations are cheap enough. From the chart also, it looks like there is a consolidation. The stocks have fallen, and then they have stopped falling, and stopped falling for a very long time. So that itself is an indicator. So that indicator we first seen, and then we started looking into the sector, talk to management, seen the capacity expansion, seen their plans of reducing the working capital cycles in their plans of getting into how to be more competitive by operational efficiency. And also, I think China cannot indefinitely continue dumping from their capacity, and also the government will wake up to it, whosoever comes into the power next. And there will be some respite for this sector. So that is the broad thesis on which we are working on. And there is a large space, like from the CDMO chemicals to bulk chemicals. So if you can position yourselves to areas where Chinese dumping is not the problem, where there is a kind of customer engagements are pretty tight and long term. So those kind of areas, I think to be looked into rather than looking into areas where Chinese dumping is the cause of fall of the sector.
Okay, talk to us some names which you are studying, with the disclaimer that obviously these are not stock recommendations.
Yeah,
But
there is no
what
recommendation.
what chemistry are you studying? These are 40 stories, 40 different chemistries,
absolutely.
and it's a very stock specific play here. But what stories feeding into what sectors? Where are you started research?
Yeah, we have started research for, I think if you are talking about our research process, then we first go through the uh, companies with a bigger insight to get a feel, not for investment, but to get a feel of where the sector is going. Then we come to our company where we like that what are the major problems which these companies are not facing. Now, if we are getting into that basket, then I am looking into, say, Alkylamine, Balaji Amine, Aether Industries, Action Chemicals, uh, I cannot remember offhand. I think those are the areas where we are putting into our effort. We are looking into again a small company called Dharamse Murarji. We are talking into large companies, large expansions which are taking place like Vishnu Chemicals. So these are and then there are certain kind of commodity chemicals which are going through a cycle and then maybe coming out of the cycle, like say Tirumalai Chemicals and IG Petrochem. So this is a large basket of stocks which we have given to different analysts to study and then come up with some best ideas where we may take some position.
So this is one part. What else are you studying and researching? Are you finding it slightly risky also in this market on the valuation front, or you're comfortable? Have you raised some cash levels on the side? Have you sold any
Yeah,
positions?
as I told that I think we have raised some capital, Ajay. So we have raised almost about 20% capital and released 20% capital from our portfolio, and just want to redeploy it as and when we feel that we are comfortable. We are waiting more than the election result. We will also look for the budget, because the budget, we always say about the policy continuity, but that is an assumption, right? The policy may also make some tweaking, and those tweakings can give us huge opportunities and or may create headwind for other sectors. So that part also we want to look into.
Okay, sure. I want to. You are based in NCR, and there's a lot of activity happening in real estate there. I want to understand your thoughts on real estate. Do you have some realty names? Have you studied? Where in the cycle are we in realty?
So I think real estate cycle has started almost after many years. So it is not going to die down in 2-3 years time. It is a long cycle story. So we are invested in some real estate companies, but most real estate companies which are invested in are your region, basically MMR, Mumbai metropolitan area region, not in Delhi as such, because Delhi is already having a lot of overcapacity in NCR region. And in Delhi, capital city, there is hardly any project, right? So where we can invest in. So coming back to real estate, we have investment. Some of our investments have not really worked out that well over last 6-7 months. But we are pretty confident that we can hold it on for another 2-3 years, or at least another 2 years.
All right, Aveek, we'll let you go on that one. Thanks so much for joining us on the show today.
Thank
That
you
was
so much.
Aveek of Aveksat, and talking structurally positive about the chemical space now as an attractive risk-reward opportunity after not performing for a very long time. But
if you like this video, then like, share and subscribe to ET Now.